Welcome to my series of how I trade Nasdaq, and today I'm going to show how to trade Nasdaq using fair value gaps, and I'm going to show back testing. I'm going to show one of my live streams where I traded this strategy in 1 minute time frame, and I'm gonna show how I trade on 5 minute, 1 minute, and what I do of 15 minutes. So I'm gonna choose any random day around all-time highs. So you can, but you can't write in super chat right now, but you'll choose any random day. Uh, and it's an all-time high market. So what usually happens in the all-time high market is Nasdaq goes up pre-market, and when the market opens, it kind of goes down for 1 hour, and it kind of then again goes back up. That's what happens all day in all-time high market. So there's a lot of trapping going in there. It's not like a short selling type of day. So as I live in India, so in my time zone, the market opens 7:30 in my country. The Nasdaq opens 7:30. So if anyone doesn't know what a gap is or when the NQ opens, Eastern time 9:30 is when the Nasdaq opens, and Eastern time 4 o'clock is when the Nasdaq closes. But before that is pre-market. Okay. Futures are working like 22 hours, 23 hours a day, but in prop for 22 hours a day. So I'm gonna come to 1 minute time frame. We are right now like, okay, the market is opening here. I'm gonna go back this exact bar and come in 1 minute time frame and show you how to trade a 1 minute fair value gap. So what we are looking is three candles of same direction, like 3 green candles or 3 red candles in one direction. Okay, so if there's a 1 candle fair value gap, I don't quite really trade it, but 1 candle or 2 candle fair value gap, we need a 3 candle fair value gap in one direction in 1 minute time frame. Okay, or in 5 minute time frame. But right now I'm showing you the 1 minute time frame. Why does 1 minute time frame matter a lot? It's because there are really good trades which you enter and exit in 3 minutes. So in 3 minutes it's over. There is no chickening out of trade. There is no a lot of emotional load. Some people say that they have problem, like I enter a trade and I know it was gonna go here, and I could have just held it longer. So that thing doesn't happen in 1 minute time frame, okay? Because it's fast. I'm gonna find a trade and enter it. I'm gonna draw horizontal lines around it. Blue line is gonna be entry, red is gonna be the stop, and green is gonna be the take profit. So here you can see that there is 3 candles in a row, and the second one is gonna be the ones we're gonna enter in at, okay? But in an all-time high market, I don't want to short Nasdaq above VWAP. A near all-time high market, like this market is bullish in this time, like 11 August, is kind of bullish, okay? So since this trade was presented to me above VWAP, I would not take it. I maybe would have, but I don't want to. I will show you still how it functions. So this blue line is going to be the entry, and this red line is going to be stop, and the green line is going to be the take profit. This is going to be a 1-to-1 trade, okay? 1:1 risk reward trade. So where the price ran into fair value gap, It's when we shorted 10-point stop and 10 point of take profit. 723 is gonna be the take profit on this. And I'm gonna show you how. Oh yeah, stopped out. That's why I don't wanna trade above VWAP. That's why I don't wanna short above VWAP. But I would long if it's below VWAP because we're in the bullish trend. So doesn't matter. I'm gonna show you another one. All right, this is a bullish side trade, but it's a tiny fair value gap. I don't know if I want to trade it, but let's do this one. Let's see if it functions. It's gonna be the entry. It's gonna be the stop. And the green line is gonna be the take profit. 7-point TP around here. It's gonna be the TP. Is it 7 points? Yeah, it is kind of. Let's see if we get the entry. Okay, we did get the entry and we did the TP too. Here is the TP. Look at the high of it. We did the TP. I mean, I can't set the TP in this. We did the TP. Okay. $140 and $140. As you guys can see, that's how this trade functions. Okay. It entered and exited very fast, like in 2 minutes. Did happen. I'm gonna show you an old live stream of mine, and after that, I'm gonna show you how I trade the 5-minute and the 15-minute. This is a live stream of mine from September 24, Wednesday, and have a look. Just check everything's functioning right. Okay, yeah, everything's functioning. We entered the trade in the 1-minute time frame. $18-point stop. Just see what 18 point of TP. So what I did there is I exited half quantity and I kept the half quantity because I thought the market was gonna go much lower. As you see that I traded 2 minis and I have 1 mini right now, And on the 5-minute time frame, there is a VWAP continuation trade kind of brewing. Maybe we'll get the entry for the VWAP continuation trade. If you guys see in the right side of the chart, which is an MNQ chart, and on the left side is an NQ chart. So I'm also seeing a different time frame and different setup of a different, totally different strategy. If we want, if we think it's gonna go way lower, okay, but on the most times, like 95% of the time, we should take a 1-to-1 and just be over with it, okay? Try to take 1-to-ones, try to accumulate the ones, but don't change your bet sizing drastically. Like sometimes you take a 1-to-1 in 2 minis, and sometimes you take it in 5 micros. Sometimes you take it in 1 mini. Changing bet sizes can give you a loss. If you're new, you can go like a 3 micro or 2 micro quantity and trade it for 2 days in 2 micros. Do whatever you were, trade it for 2 days in 2 micros, and slowly go up in size. You know why? Because this strategy actually generates a lot of trades, and sometimes you might revenge trade. So I did kind of exit also my last quantity at 1-to-1, so it doesn't matter. And now I'm gonna find a 5-minute fair value gap if I can. Okay, I did. If you see that, there's 1, 2, 3, 4, 5, 6, around five candle, a 5 green candle in a row in the same direction above VWAP, going higher. So what I wanna do is I wanna pull back, price to come into this fair value gap and bounce right back. That's what happens when the price comes into this gap. Okay. In no circumstance I want to risk more than 25 to 30 points in any fair value gap, like even if it's a 15-minute or if it's a 1 minute or if it's 5 minute. In no circumstance I do want to risk more than 30 points. Okay. If it's a huge fair value gap, what I would do is calculate 30 point from the stop and keep order like that. Like let's say I want to risk 10 point in this, I would risk 10 point like this. Here 49 the entry, 39 the stop, like that. So if it were to be a 50-point candle, I would do like that, like this, like calculate 30 point from the stop, and where the 30 point is over, I would keep my orders there and take a 1-to-1 like that. But right now I wanna quickly keep orders here and show you guys how to place orders and how to execute this strategy. And where did I get this indicator where these fair value gaps are coming from? If you just go to indicators in your trading view and just type FVG, this is the indicator I'm using. Nephew Sam, 17K users of this indicator, particular ones. And I will also have a B variant of this video. I'll make a part 2 where I'm gonna highlight revenge trading and inverse fair value gaps and how that functions and what do I do there. I usually don't trade inverse fair value gaps, that's why I haven't kept them in the part 1, but they can make you revenge trade a lot. A lot of revenge trading kind of comes from inverse fair value gaps. Like in a rangey market, every fair value gap's kind of inverses, okay? And you don't have to trade every inversion, or you don't have to trade every fair value gap. You just have to be done in a good ones, okay? Find a good ones and be done, and not stock into when it's a bad trade. You have to identify that, and that's what you get paid for. not take bad trades and just take good trades. That's how it functions. That's how we want it to function. Oh my God. That's how we want it to function. Okay. So, uh, okay, stopped out right there. It did went up and it did came there right back down. This is if I were to keep an order, I would keep here. Like if I were to short it, but I don't want to short it. So let's find another trade in the 5 minutes again. Okay, yeah, here's the trade. Price did run into this fair value gap, but I couldn't execute. And this was the stop, 20 points. I'm gonna draw horizontal lines here because I couldn't execute on time. I can go back here. All right, let me just keep a sell order here. This is gonna be the sell. Right when it runs into this fair value gap, and this is gonna be the stop. And a 1-to-1 is gonna be the risk and reward, 20 points downside. It can't keep the TP. I'm gonna keep a horizontal around 93s. It's gonna be the TP or 92s. Okay, let's see. So, as you guys see, that price did went into the gap, quickly rejected, and even gave the TP in just one candle. Okay, this was a TP, and this particular candle just went up and down too. So now let's see if it. Okay, yeah, it did. It sure did went a lot lower. So this is how this trade is gonna function. Okay. So what do I think of 15-minute fair value gaps? I don't usually trade a 15-minute fair value gap because it's very hard to find 3 candles in a row in a 15-minute time frame, because the candles are gonna be big, a lot big, like 100-point candle, something like that. So if I find a 15-minute candle and I get my 20-30 points up in a fair value gap, I will trade it. But mostly how I find fair value gaps is 5 minute and 1 minute. I did try to trade 2 minute time frame, but the failure rate is quite high in the 2 minute time frame. 1 minute is just fine. 5 minute is just very fine. Okay. But if I were to look at 15-minute time frame fair value gaps, I would look at it as area of resistance or area of support. I would look at it like that. I would not look to trade it. Okay. So that's that. This is how I trade fair value gaps. This is my live stream, how I trade it. I showed you in the 5 minute. I'm gonna make a part 2 video of it about inversion fair value gaps and how you can go broke trading fair value gaps when you are revenge trading. It's very necessary to talk about revenge trading in fair value gaps and in 1 minute time frame, because it generates a lot of trades. And which one to avoid is a very, very big topic to save your P&L. But this is how I exactly execute. If there's anything any of you guys don't understand, or you want me to make a separate video about, you can just comment down. Like and subscribe this video. Thank you for watching.